Are we switched over, Nielski?
I don't see it. I don't see us on the event platform. We very well could be live with a lag. So if anyone sees this, yep, yeah, we're live. Hey everyone, Neil Hamilton with Benzinga, bringing you another Benzinga boot camp for the month of July. Joined with me today is my lovely assistant, Hot Stocks Luke, also known as Luke Jacoby. Luke, how's it going, man?
Absolutely. And Neil, thank you for doing the intro right. Last time you forgot to introduce me as Hot Stocks Luke, so I appreciate that. You kept it in mind.
Yeah, no, I got title cards this time. I was reminded. Can you tell Spencer to pipe it down in the background? I hear pre-market prep in the background.
He's wrapping up. He's wrapping up.
All right.
It was a good first segment of the day.
It was good. Anyone that tuned into pre-market prep, which we will do for all of our boot camps, definitely encourage you to do so. There's always a lot of good education there that actually runs through the week, Monday through Friday. It's a great way to start your day. Today's top topic was sort of the restructuring of the Russell 2000 and Russell 3000. So there's a lot to learn there. Mainly your COVID plays, your Peloton, your Zoom that were popping off. Well, they just joined the Russell. So it's looking like a lot of that buy-in pressure that was driving up those prices might diminish. So make sure that you play your stocks wisely. And hopefully today we'll learn some ways to play the fade or the downside on some of those stocks. Luke, we have a lot in store today, even more in store tomorrow. I was wondering, Luke, if you could sort of break down Hot Stocks, Luke, if you could break down what we have going on today.
Okay, so like Neil just said, we got 2 days of content coming up. Today is the live trading day. So we're going to be hopping on with 3 professional traders, and they are going to be trading live right in front of us. We're going to see their screens. We're going to see their faces. You're going to be able to ask them questions. And we're just going to see, here's how they operate. Here's how they trade. These are people who have been doing this for decades. It's their main source of income. I mean, these are the people that we want to be watching trading live. It's going to be super interactive. It's going to be fast paced. I have one recommendation for all of these boot camps that we do, which is, check this out. I've got my notepad here. Neil's got his as well. Take notes. Okay, this is going to move quickly. So buckle up for the ride. The live trading today, I think, is an hour. Neil, is that right?
Yeah, the live trading will go on for an hour, and then we've got time for Q&A. So make sure you watch. They're going to be moving pretty quick. We've got Nick Shaheen, Options Master. We've got Anne-Marie Ban, Master of all things day trading. And then we're going to have a special guest from Ticker Talker, which, if you haven't heard of it, is an algorithmic trading website, streams every single day. He will be there talking about some very rapid stuff. So we're talking lightning fast, like the lightning stock that you see behind me. So make sure that you're watching, and if you have questions, keep them written down and ready to go when we get to that Q&A session, because it's confusing to watch. This is what day trading looks like, but we're here to make sure you understand it and get you set up from zero to hero.
And Neil, we're here too to learn ourselves.
I don't
know. At least I am.
No, I consider myself an absolute novice with any type of money, anything having to do with money.
I give myself novice plus.
Now, okay, that's fair. That's fair. You've been using Venmo longer than I have.
Yeah, there we go.
Yeah, so I'm a lowly Robin Hood trader. No offense to our Robin Hood traders out there, but we're going to talk about some stuff that can get pretty advanced, so that you can do some more advanced risk mitigation strategies that are available to you with some other brokerages that we'll actually be talking about today. But we want to find stuff that suits your style, suits your risk tolerance, or it suits your the size of your account. So definitely be open to learning some things. And remember, everything that's going on here today is 100% education and entertainment only. Don't try to trade along with anyone. Don't try to buy any stocks like these are recommendations. These are not recommendations. We're here to educate and entertain so that you can trade profitably and have fun while doing it. And that's sort of the name of the game at Benzinga.
And Neil, let's talk about tomorrow a little bit too. So we just talked about how today is the live trading day. Tomorrow is the full education day. So we're running from 10 a.m. to 4 p.m. Eastern tomorrow. And throughout that day, we're going to have 13 educators. right? It's going to be 6, 7, 8 hours of content. We're starting off with the very basics. We're going to have a couple folks around to tell us, here's how to pick stocks. Here's how to think about stock stories. We're going to get into options, right? What is a call? What is a put? And get more advanced as the day goes on. Progressing all the way through, here's how you day trade. Here's how you do more advanced options trades. Here's how you hedge your positions. The day is set up so that way, if you're a beginner, you're going to be able to hop right in the morning. And even if you're more intermediate advanced, it's going to have great principles and some stock ideas in there as well for you. And it's going to get more and more and more advanced as the day goes on. So tomorrow is the full education day. Today is sort of like the preview, watch how these professionals use these principles. And then tomorrow is really when we're going to get into here's how you apply these principles yourself.
Yep. Great point. We really want to structure this so that you see the absolute pinnacle of all of these lessons at work. People actually trading with their real accounts, real money, making money, and then perhaps losing money. This is real stuff. I mean, trading is a game of risk, and you're going to be up some days, you're going to be down some days, but overall, it's all about having the right state of mind and being consistent. But we want to show you how these pros do it on a daily basis, and then we're going to take baby steps tomorrow, literally step by step, from just introduction to stocks and options. What are they? How do they work? How do they work? To day trading. So I want to talk a little bit about your options. So one thing that I will say is this is a boot camp. So this is not you pay 40 grand to sit down in a classroom, and over a 6-month period, someone's going to turn you into a day trader, and then you decide whether or not you like it. We are taking all of the core lessons that you must know in order to be profitable with investing, be profitable with shorter term investing and trading, and then take that to another level, and then perhaps do some more active trading on the side. So that's going to take us from 10 a.m. all the way until 4 p.m. or a little bit after 4 until about 5 p.m. tomorrow Eastern time. So that's a lot of content to fit into Hot Stocks Luke's notebook. Yep. So bear in mind, we
got a fresh notebook, guys.
that's good. I gotta get one legal pad with more room for notes like you have. So we've given you the option to go ahead and purchase the complete masterclass class recording, and we've created a learning packet to go along with every single topic, asking questions about what's being taught so that you can fill it in as you go. So you can get the most value out of it, learn as much as you can. But then when you want to go back to it later, highly recommend purchasing that. It's a very low price right now. It will go up tomorrow, but it's a very low price right now. Go ahead and purchase that, and you'll be able to have 8+ hours. Luke corrected me earlier. I think it's going to come out to be about 10+ hours of education.
10 and a half, Neil.
10 and a half.
And so, yes, if you're not going to be able to absorb 10 and a half hours on the fly, definitely get that course so you can go back to it. You rewatch a little bit of it every day, every week, etc.
Yeah, with this type of stuff, I would recommend getting the recording, maybe doing an hour a day, hour a week kind of thing. Learning at your own pace. You can't put a price on that. So we are keeping the price very low, so you can get that. Also, we do have a deeper dive for more serious learners that want to interact with our traders, our mentors, available. So we call that our VIP breakout track. You can also get that. If you scroll up on Hey Summit, our platform, just scroll up. It's actually on this side. You will see the option in the navigation to upgrade. And if you do that, you'll be able to, one, get those recordings we just talked about, but also get access to that separate track that's more intensive, smaller classroom style education with those mentors. Nick Shaheen, Options Master, who will be in our live trading today, will also be there. So highly recommend that. We've also got Alex Cole, who has a very compelling pedigree doing data at Bloomberg. So he has some very, very new outlooks on technical analysis. So basically how to read charts, how traditionally to do it, and then how he has come up with a new way to do it in 2020. So definitely recommend getting those if you want to get the most out of this boot camp.
Yeah. And the thing that I'll say about the breakout too, because it is a smaller group, every question gets answered, right? In the main session, I mean, we're going to have, I don't know, several thousand people in there at once, and there's so many questions and things are flying. In the breakout, we will go through every single question that people ask. We'll run long if we have to. That's no problem. So again, if you want to get in on that options deep dive, have sort of that really interactive Q&A or the advanced technical analysis, make sure you join that one.
Yep. And one last thing, while we're in the Hey Summit platform today and tomorrow, make sure you use that comment section. Yes, it's a little bit wonky. The latest comment should be on the top, but right now it's on the bottom. We plan on fixing that. We've been talking to the makers of the platform, and they're very attentive, and I think we'll have that fixed for the next bootcamp. But for the time being, make sure you scroll down to the bottom when you have a question or to check what the latest question is. And then I or Luke, your host, will make sure that those questions get over to our speakers so we can make this as interactive as possible. This is not a big webinar where we're going to try to sell you stuff. This is about you learning as much as possible, and then you guys are holding us to account for that. We will send you a post-event survey, and I want you guys to be hard on us. Let us know how we can improve this month after month.
Yeah. And so this is the third time that we're doing this, and we're trying to make this more and more useful every time, and I think it's working. We're up to 18,000 people registered for today and tomorrow's event, which is mind blowing to me. It might be the biggest trading event in the world. I don't know if we can have a fact checker on that, Neil.
No,
but if it is, that makes it the biggest trading event in the galaxy as well, as far as we know.
I took some science classes in college, and that checks out.
Okay.
So I support
good.
that.
Good. I'm glad to hear it.
All right, so I don't want to belabor too many of these points. If you guys have questions about anything technical, go ahead and throw them in the chat. Benzinga staffers will be there to answer any technical questions, but try to keep them focused on the content. And without further ado, I'd love to get started with some live trading.
Let's do it.
The market hasn't opened yet, so we're going to have some pre-market conversations about some setups and stuff like that. But Luke is obviously raring to go.
I'm ready, Neil.
Looks like first we have Anne-Marie Band. Anne-Marie, how are you doing?
I'm well. How are you?
Doing wonderful. It's great to have you.
I'm glad to be here.
So Anne-Marie, since you're the first one here, would you mind, for the uninitiated, telling folks a little bit about yourself and your trading style?
Okay. I have been trading for almost 2 decades, and now I trade futures. Before, I was a little bit of a shotgun splatter kind of trader. Way back in the day, I would try to, gosh, it feels like I'm under a spotlight. Hang on. Okay, that feels a little bit better. I traded, well, now I feel like I'm in a cave. You're going to have to forgive me.
But now I'm adjusting my lighting too. We can never really get it right.
Okay.
You look great though.
Okay, I appreciate that. So the big thing for me was learning to focus. I had a really tough time learning to focus. I was trying to listen to everything because I thought more was better. And through the passage of time, I have figured out a very refined and simplistic approach to the markets. And basically, I see my charts and just follow where I think everyone is going in general. And that really sounds simple, but it's a lot harder sometimes because we always want to try to predict what's next instead of just following what's there. Obviously, things are going to change, but they usually give us a heads up beforehand. And so I've written a couple of books talking about those sorts of things, published through McGraw-Hill Finance. We have the tradingbook.com, funded accounts all over the place, but certainly with Top Step Trader, which is why I'm wearing this swag that says Top Step Trader. And I actively engage every day. I think you're a student until the day you die when you trade. If your mind feels like you've got it, you haven't got it. So just keep that mindset always learning, and you'll find your way.
Yeah, and I think that's a great note to end on. So Anne-Marie, is great to have just a lifetime educator and someone who has really been through the everything pretty much with day trading. So great to have you.
Thank you.
Rob, can you hear me? Rob, you're muted. Rob is coming to us live from the Bat Cave at Ticker Talker.
There we go. How about that?
Hey, I can hear you. How's it going, man?
All right, let me get up the headset here. Great. It's been a great trading year. It's been a great week. And yeah, really looking forward to showing everybody what we do here.
All right, great. Could you give everyone just a brief description? I see you got a lot of charts behind you.
I've
All
got
right, so this is
27-inch monitors because we're tracking a lot of stuff. But it's very basic. So when you hear me, it's might be confusing at first, but it's actually very simple. It's a quantitative model. So basically, we can pick up on algorithmic trading very easily. Most traders think that algos are coming down to pick them off and then go back the other way. That's not true. The only guys who are picking you off are high frequency trading, which is different. That's going to pick you off by a millipenny. But the algorithmic trading is very obvious, and we can pick up on that very quickly. So what we do is we use 4 time frames for anything that we're looking at, right? And we can be on a shorter term, the 1 minute, 3 minute, 5 minute. We can be on what we call full time frame continuity, the monthly, the weekly, the daily, and the 60. And here's how you pick up on algorithmic trading very simply. If you have 4 time frames and the price is higher on all time frames, right? They're all green. That tells us exactly what they're doing. We have natural buyers in there. We have to because we have 4 participation groups by price and time. And you have to tell an algorithm what to do, all right? You have to program it. And you got to tell it 3 things. You got to tell it, what do you want to do, buy or sell? When do you want to do it? And how do you do it, right? And so when all those time frames are going in one direction, we know exactly what they told them. They told them to buy, they told them to do it now, and they told them by taking the offer, right? So we know that, and you'll see them turn on and turn off. It's really simple. So we also know that there's only so many ways that price can reverse or continue. And there's from one bar to the next, there's only 3 things that can possibly happen.
Yep.
You can only have an inside bar where you can't take out the highs or lows. You don't want to trade that. That's what's going on in the S&P right now on the weekly. You can take out either the high or the low, right? And that's taking out one side or the other. We call that scenario 2. Or you take out both sides and have an outside bar. And that phenomenon itself is one of the most important things you can understand because it helps you to gauge magnitude. How far is something going to go? When somebody says it's in beast mode and I got out too early, we don't get out too early unless we have a reversal against us.
Okay, so for everyone that didn't understand some elements of that, if you're not familiar with algorithmic trading, this is automatic trading based on algorithms that are written. So basically, if this happens, then do this. So there are some entities out there. Some of them are hedge funds that are essentially auto trading based on data inputs that they're getting, and they're moving a lot of money that's affecting the price of a stock. So Rob, correct me if I'm wrong, but what you're doing is identifying those traces, seeing that algorithmic trading is taking place, and then reacting to it as a human and making trading decisions based on that.
Correct. And so we also know there's only so many ways prices reverse. So when we have those conditions, we can look for corrective activity and then reversals back into the direction and let the big boys do the heavy lifting for us. As well as it's important to understand that we want to see things coming back through previous ranges, right? As opposed to just blast into the highs. It doesn't mean we can't go after things that are going into the highs or short things going into the lows. But when you come back through a previous range, that's going to speed up the aggregation. And so what I mean by aggregation is that price doesn't move per se, right? It aggregates. You have to have a buyer and a seller for every transaction, right? So when we have all these things going green and we know the algorithmic are buyers, if you come back through a previous range, what that does is it removes liquidity. And what I mean by that is people on the wrong side are getting stopped out. Right? That adds to the buying power. And by removing liquidity, if this machine is told to buy, it's taking stock away from them and they have to chase it up and it goes even faster. So we look for that condition and coming back through a previous range because that puts more people on our side to run the things faster.
Super fascinating. I love the differences that we have here. Completely different approaches to being profitable with stocks. Stock trading right now. So I think this is going to be a great show. I do want to say we have Nick Shaheen as well. Nick Shaheen won't be with us for the whole time. He's going to be focusing only on options. So he'll have a couple trades. I'm not sure when he's going to come in, but Shelby, who's helping us, she's producing the boot camp, will be bringing him in. So he might just show up.
It's a good day for options too, because we call it cheapo options Friday. So as the day goes on, we're looking for these setups to trigger options at the end of the day, and you can get those 10 baggers. Or like last Friday was a bunch of biotechs took off in the last half an hour, and a bunch of those options were up 1,000, 2,000%. It was awesome.
That's a really good point and sort of a fundamental for folks that are interested in options. Friday is a great day to take a look at the opportunities that are out there. Really quick, I'm just going to get confirmation if we can get Nick in here right now. Shelby, if you hear me, are we able to get Nick in?
Hey guys, Nick is here.
I'm
He
here.
doesn't
I'm
have
here. I
video.
just don't have video.
That's okay. Just
I'm still sporting the COVID look, so I'm pretty sure you don't look at me right now.
well, that is fine. Nick, if you could give us a little bit of an introduction, we
Sure.
are 4 minutes to the open. Nick, if you could give us a little bit of an introduction to your style and what folks will be seeing from you today.
Okay, so I am definitely not Wall Street. I am Main Street. I'm an engineer and a finance guy, and I learned all of this on my own. And I heard Anne-Marie earlier, and I agree with what she's saying. Don't try to predict. That's my thing. Keep it simple, boring, and avoid the trenches. I use options in a different way than most people do. Instead of chasing something, I'd rather sell risk where stock is not going. That would be the best way for me to do it. And as long as I'm true to my charts, that is my guiding light, really. I can't tell you which way things are going to break, but I can tell you once a trend line or a level is broken, I can tell you what's going to happen next. So what you do is you plan your day, your week, whatever trading time frame you're at. And once you see the trigger, you get to it. No trigger, no trade. I don't try to guess any which way or another. And don't swing for the fences with options. I try to get base hits, and that's how I win in the long run. Otherwise, it gets pretty ugly pretty quickly.
Yep, and I love that about your style. So a lot of folks that are coming, that are newer to options, that are really diving into it, don't really know there like these other ways of just like straight directional trades, big bets, of making a consistent profit. You know, as long as you're just picking up money that's sitting there and you're following these frankly less salacious, less exciting tactics, it's going to pay off in the longer term. So Nick, that's a big part of why I love your options, your approach to options.
I keep it in plain simple English. As far as options, it gets wonky pretty quickly, and you can complicate things. And it's really not that complicated. It's really simple as long as you follow your rules. So I hear what Rob is saying. I totally get what he's saying, which I guess means that I made it to Wall Street. Since I heard what he said with the hand and everything, I was like, okay, I know what you're talking about there. I definitely do not have as many monitors though.
Yeah, those were those trading floor signals, or were those?
No, he was showing you a candle size. He was
Okay.
showing you the candle, the open, high, and low, and all of that.
Okay. All right. So great. I love the team that we have here today. We're 2 minutes away from the open. What I would love to do is have folks start sharing their screen. So go ahead and switch to screen share, and enter your brokerages. And whoever is, I'm gonna be hands off for the beginning, because I would love an introduction to what your morning setups are, what is behind your thinking, and then what I'll do is go around with each of you and check in and just see what you're doing and see if there's any action going on. Hoping to see some fireworks this morning. So right now we've got Anne-Marie, right? I think I recognize this rig.
Yes.
So Anne-Marie, what tickers are you looking at today?
Well, I have a few of them that I was hoping to maybe piggyback on Nick. I love the things that he said about the options and how he positions them. I am very much the same way. And so if there's a little bit of a lull and we move through that, we're going to take a look at a few of these COVID plays, as well as what I really like. And that is, of course, the future space. And we are coming into a pretty landlocked Friday. Everything that I'm showing, there goes the bell, I think. Everything I'm showing shows us landlocked, and that is going to be something that we'll have to navigate around. So we'll go from support to resistance and resistance to support. And so what we're coming into right this minute is last week's close and last month's close. That's the round at about the same number, 30, 57, 50, and buyers have been stepping in there for a while. They stepped in there early this morning. They're stepping in here this morning, but we've got a little bit more negative pressure, so we'll see it dance around. So I'm waiting for it to stabilize a bit. This is a depth of market. And so what it's showing us is where sellers are sitting up into the space, and they can get shoved out right away. But usually if there's a few of them, you'll, well, see, there you have it. If there are a few buyers pushing up into the VWAP, which is what I think we're going to do, it'll run right past those sellers. So I'm waiting for them to settle out for the first few minutes and see where we go from there. That's what I'm looking for.
Okay, great. Okay, so Rob, okay, looks like Rob is talking to a few of the folks in this chat room. Nick, are you able to show us what you're looking at right now?
Yes, I am. Just give me 1 second here. Sorry about that.
Okay, while you're doing that, Anne-Marie, the VWAP.
Yeah.
I hear it a lot working at Benzinga. Could you explain to me what the VWAP is and how you use it?
Okay, so the VWAP is the volume weighted average price. And if you are a day trader, it is the most important line in the sand to look at, because across all time frames, it is exactly the same. So it does not matter which time frame you're looking at, 4-hour, daily, 5-minute, 2400 tick, whatever it is, that number's the same. So what that means is everybody that uses the VWAP is seeing the same number. That's different than a moving average, because if you move through averages, just sort of like what Rob is saying, across 4 different time frames, he can see everybody lifting into that motion. That's telling him, hey, listen, these guys were all doing the same things at the same time. Well, the VWAP sort of tells us that just a little bit. And so for me, what I like to look at is, one, the slope of the VWAP. Right now, it's relatively flat. And two, where we are in relation to the VWAP, because if we're below the VWAP, it means that most of the people who engaged that volume weighted amount, if it's below the VWAP, they have a negative balance on the trades that they have taken from the contracts to the bullish side. And so as price fades, they'll be inclined to sell and then try to pick up the next levels of support, which you can see over here. I've got it marked in my grid at 30.54, and that's where they're jumping from right now. The goal is, when you're trading and you're below the VWAP, you look for bounces that fade where old support becomes new resistance, and you're able to take a trade into the next area of support, knowing that because we have generally bullish markets most of the time, what traders are going to try and do is recapture that VWAP. But as long as we're under it, sellers are going to have strength. And down here, you can see we really don't have any buying pressure that's showing solid until about 30.48. I love using the depth of market here in MotiveWave. It's a great way to look at price action and frontline support. I can also go over here at my 4-hour chart, and I can see that 30.4675 is a prior weekly close that's going to sort of bound me underneath. So I'm getting a sense of, if I were to trade long, what kind of risk might potentially open up here? And if I were to trade short, because I have a resistance edge up here, what kind of risk might I engage from that perspective? But the VWAP always gives me the framework of what the traders are trying to accomplish. It's a very, very good line to look at.
All right, thank you for that explanation, and for the folks listening or watching, rather, that the VWAP is an indicator that you should be able to turn on with any brokerage chart or any charting tool that you're using. So it is very widely used. And tomorrow, when we get deeper into charting, if you have questions about the VWAP, make sure that you keep them ready, because we'll talk about that more in depth. All right, Anne-Marie, I want to switch over to Nick.
Absolutely.
So Nick, if you wouldn't mind sharing your screen. let's take a look at what you are looking at this morning.
All right. So I listened to Anne Marie and see how she has a system. She has her tools. She knows them inside and out. If you don't have that, you need to get help, especially if you're actively trading, because without that, your opponent is her. So every trade you make, there's an opponent on the other side who has better tools than you, or at least who has tools than you don't. So today I'm just going to pick up on last time. And I'm going to keep it simple and show you as far as the options are concerned. Last time I was on with you guys, we had a whole bunch of people and I said, let's make a trade. And this is the kind of trade I love. For example, AMD, during the flash crash or the COVID crash, I was able to sell puts at $20 for over $2. So somebody out there paid me $2 per contract. So on 10, it's like $2,000 in order to say, okay, I'll buy your shares if they fall below 20. And my break even was 18 on AMD. So it was another 30% down from where it was. So I did a similar trade the other day, and I did it live with you, and I'm just going to close it now. Not because that's where I want to get out, just to show you of how easy it is if you do a little bit of homework and be prepared to act when other people are panicking. That happened yesterday. The stock market dropped a little bit. I said to the people in the chat room, hey, this is not the time to buy puts. Somebody was short puts. It's like, hold on a little bit. We're coming into some support. So if you don't have your range ahead of time, then you're just acting on ticks rather than levels. Most ticks don't matter. Some do. And those are the ones that Rob was talking about earlier and Marie is talking about here, is that only a few ticks matter. If it's red and big, it makes you emotional, you want to act on it, you do the wrong thing. So in this case, it's so easy that what I do is, because if I know my levels, I act and I'm comfortable. I can go to sleep knowing that, okay, I did the right thing. So here I can just close it. Oh, at the time, let me describe what it was. I sold risk. So I was a micro market maker and I said, okay, you know what? I'm going to sell somebody some insurance through October on their AMD stock. If it falls 242 or below, I'm committed to buy it at 42, even if it falls to zero.
So Nick, really very simply put, for people like me, you sold puts, meaning that you wrote a contract, you wrote an options contract. And that's what you mean by a mini market maker.
Yes.
You created that.
Yes. So here we can create another one here. So this is AMD, and let's say August. So if you're okay buying AMD at $40, okay, then you would write a put. So you simply is going like this. Okay, I want to sell. I can't afford 10. I want to commit only to 100. And I'm going to ask low because this is a paper trading account. And for some reason, it doesn't let me take them in. So I'm just going to say, I'm humble. I only want to take 83. So I'll do 1 just to show you how the things go. And if it fills or not, I'm not sure, this paper trading, but let's go with the one I have open already. And I'll go here, and I'm okay. This filled. See, it just filled right there for whatever it was. So if I wanted, let's say if I wanted to close half, I'll do 5. And here I have to overpay for them to fill my order because that's ridiculous in the paper trading account. In real life, I would go for the mid, plus or minus a few pennies. If it's a liquid issue, then it should fill within the mid, the middle between bid and ask. So not to waste time here, I'll just, okay, I'm going to book half my profit. And before I do that, let me show you my profit. So I'm going to close up all the other ones. So eliminate the noise, visual noise. So, okay, so I had 10 sold. I collected 277 at the time I sold them. And now they're only $2.10. Either the price action or the time or the VIX levels or all of the above deflated enough to where I made money. Why did I make money? Because I collected 277 and now it's only worth 2-ish. So 2,700, now it's 2,100 to close the whole thing. So I have $650 in profit and I didn't do anything. Nothing came out of my account. It was credit into my account. It's not my cash yet, but it's credit into my account. So if I hit send here, it should fill unless things moved while we were talking. And this is as simple as that. Boom. So now half the risk is off. I bought back half my risk. I still have half of them open, same stats, and half the profit here. Only now I have actual profits. And if I go to my general ledger and I look, and now I have actual cash versus this can still go wrong. I mean, we can still go to zero, you know.
Yeah.
So it's as simple as finding where shares are not going to go. So if you visually want to look at it, I'm sticking with AMD because we're just doing it. And also you need to learn to look at multiple time frames. So this is 1 year's worth of data, daily chart, which is most everybody look at. That's not enough. If you're actively trading, you have to go down in increments that make sense to you. I like the 15 minutes. I like the 30 and the 60 and the 2 hour. And also you have to zoom out, because if I'm making a commitment at 42, this is where it gets really almost like art. So you look at it, there's one tick that jumps off the screen for me. Can you guys see it, and gals? I see one tick that just jump out. Okay, so to me, here's a little quick lesson in Main Street technicals. This tick right here is probably the most important one on the screen for me as a put seller. It is this is a weekly. So for 1 week, they tried to go to here. They hated it. And then they loved it. They said, you know what? We don't have a clue. Let's just close it where it was. Indecision, right? And then it was the bottom for a huge run. And it was also a battle zone before the breakout. So a couple of times they decided. So this are two important spots. So I'm not picking 40 out of the blue. I picked it because I know that there should be buyer there, even if a debacle happened.
Yep.
So if this falls to here and you're panicking down here, you're making a mistake.
So for the folks watching, when we're using charts and recognizing patterns and using that to analyze the buyer and seller behavior, this is technical analysis. This is when you hear someone say they're a technical trader, this is exactly what we're talking about. Anne-Marie, Rob, and Nick all leverage technical analysis for their frankly very different styles of trading. So what Nick is doing here is taking a look at a chart, using it to find a time that's probably going to trick a lot of other people that are interested in buying options contracts, and then betting against the direction that the buyer believes that it will go by buying it, or by creating a put contract and then having someone else buy that. Nick, is that a fair assessment?
That is. So this box right here, I can sell a risk here knowing that I did the right thing. It will take let's put it this way. If AMD is down here, it's a huge event, in my opinion, either system-wide or AMD. Like, you know, their architecture is no longer valid or something like that, or the market crashed 30%, in my opinion. Otherwise, selling puts down here makes sense. So I'm not saying go out and sell puts. And by the way, huge caveat, I never sell puts in a stock I cannot own. Okay?
Thank you for saying that.
That's how accounts blow up.
Otherwise, and why is that? How do you? I don't want to get too much into it.
Because the broker allows you to sell puts you cannot afford to buy. That's insane. So because they make a guess on your credit score or whatever, and they put a parameter in there that they require this much money only to secure in cash out of your account. So if you have 100,000, they would let you commit to more than 100,000 purchase worth of stock. So what happens is if price goes below your put, you may wake up owning shares. And then they say, you don't have enough to buy all these shares. You got a margin call. So you have to sell them right away. So it's not a disaster, not necessarily a disaster. I've been put stocks before, but I don't do it unless I can, or at least I'm willing to do it, to buy the shares. If you're only doing it to trade, then you should probably use a put spread, a bull put spread, which is a credit put spread. So you sell the put, but then you buy a put lower to limit your maximum loss. Otherwise, you can create some problems or drama on the phone with your broker. So don't be brave and say, oh, we'll never get there. Hey, we've seen some pretty strange things happen lately. So don't say never. It could always happen. So don't be brave and don't do stupid stuff like that.
Yep, great market right now for options, but definitely make sure you know what you're doing to mitigate risk.
Absolutely.
So, okay, thank you for that introduction, Nick. I do have a couple questions from chat, but before I do that, I want to make sure I knock out one for Anne-Marie. Anne-Marie, and then I want to get Robin here. I want to kick us into some high speed. So, Rob, you're up next. Anne-Marie, what is the brokerage or charting tool that you were using?
This is called Motive Wave. It is, I've been with this charting company for about 9 years, and they are absolutely fantastic. Incredible customer service, beautiful tools. Absolutely love them. Motivewave.com. And of course, it doesn't hurt that I built custom studies on it, but yes, you can absolutely go to Motive Wave. They are phenomenal. They are really phenomenal.
And a quick note to everyone. So I think Anne-Marie, Anne-Marie's DNA is in Motive Wave. So I know something that I want to say is that these brokerages are matching the styles of the traders using them. So I think we're going to see a pretty wide array of brokerages that people are using to actually execute trades with their accounts. So, you know, it's about what works for you. This event is sponsored by Gatsby, which is a really cool app for trading options. It's a bit newer, but it's fantastic. And then we also have Trade Zero, which is a fantastic brokerage platform for active investing and trading. So make sure you find the one that works for you. I think the best way to do that is to first identify your style, what you're interested, what you feel like you can actually do, and then finding the brokerage that matches those requirements. It doesn't hurt to have an educator that can help you, or can help by recommending a brokerage. All right, so I want to hop in with Rob. Rob, can you hear me? What? Yeah, Rob's talking to his chat right now, so he's pretty busy. Rob, when you're ready, pop in.
Yep, I'm here.
Oh. Okay, Rob, can you share your screen and tell me a little bit about what you got going on right now?
Oh, yeah. Okay. Okay, well, I got to select the right screen. Screen 6. Okay, now. Here's a little rock and roll for you, if you like some rock and roll. All right, so what we do is we disseminate the gap list. All right, and so what we do here, we just follow along with what I was saying before, right? Do we know outside bars exist where you take out both sides of previous range? We do. Okay, so if we go to I know, I tweet out this list in the morning, a gap list that we're looking at. Now, if you take a look at this, all right, this is called exhaustion risk. All right, anytime you're going into new all-time highs, remember I said you want to come back through a previous range. This is exhaustion risk because you've pretty much blown out anybody who's short. So anybody who wanted to stay long yesterday, they can stay long, goes out on the highs. Boy, once they start profit taking, slight higher high, right? And in 8 minutes, watch this, on a 1 minute chart, here. So for the real fast people,
whoa,
when it goes here and goes red, and we know outside bars exist on the 1 minute, you hit it right there. Boom. Now you got your outside bar of this and hopefully more of what you got. Now, here's a very important point. For most traders, they will take a position and then try and scale out. You want to add to your winners. That's how you make a lot of money, right? You get out of your losers immediately, but if something's going your way, oftentimes people say, we peace out. And that's how you know they don't know how to gauge magnitude, because they'll say, I told you it was going from 40 to 60, and it did, and I'm selling my last piece. I'm like, if it's going to 60, I want to be as long as I've ever been when it gets up there. So here we go. So boom, this comes down, and we have no higher high on the 1 minute. Here's an inside bar. That's the consolidation. Boom, add right there. So this is, you hit here, short at below 31.64. You add here below 27.63. Now, as it's coming down through here, if you go to the daily, guess where it's going? This is going outside day for sure, right? It does. And then we have exhaustion risk. Once you go outside on both sides, you've blown out everybody from yesterday. So another thing we call country and western, we got both kinds, yeah, is that when you take money on the short side and they're tanking, right? No higher high on this. Look at this. This is from 27.63. Your first higher high was an inside bar reversal down here, above 25.69. Here's another mistake people will make. If you have a reversal, you don't just get out, you reverse and get long. Take all the money you just made on this, because now we're using their money, right? We always want to play with house money. So then we reverse and get long here, above 25.69, here, here, here. And so far, this is the first lower low. And so that's how when your things are really moving. There's a couple other ways you can look at. ZGNX is also on our list here. Sometimes I'm just
So really quick, Rob, I want to ask you. So we've got these tickers. We had a Novial. Now we're getting into GN Access. One I'm not personally familiar with. How much do you care about the story of the company, what their product is, or anything like that?
Only as it relates to other names. And so something like, what's going on? Is it part of a sector ETF? Is it? I basically don't care what the company does.
Okay.
it's pure buying and selling. As far as just as it would relate to other companies, say it's an oil stock, and so lots of the oil stocks are all the airlines, or it's pandemic or what have you.
Yeah.
So here's another one we're watching, is the GNX, right? So there's only so many ways price can reverse, right? This is 1 minute, and I can slow this one down a little bit too. And so this we call scenario 2 because it took out the previous high, right? Now, one of the ways you reverse, you take out one direction and then you go the other. We call this a 2-2 reversal off the 1 minute here, 31.72. You got an inside bar add at 30.53. And if you get stopped out in here, that's okay because we can use multiple time frames. This is just 1 minute. Not everybody's going to be the ninja on that. But you can go to a 3 minute and you're going to see the same thing. The gap up, right? Which is a 2. Here's your reversal right there. Boom. Below 30.34 and no higher high until 26. Nope, that didn't do it. Still have no higher high, right? So here from 30 here with $5 in 15 minutes. So when you really know what you're doing with this stuff happens all day long. And so that's why we watch the gap list first to see if what we can get going, and then we'll disseminate what's going on because we're expecting not too much in the futures. However, if you go to the SPY, here's what you can know. On the opening here, here's what we know. We know it's an inside week, so we can expect it to go back and forth. It hasn't broken out this week, right? So if we go to 60 minute, like I said, not everybody's going to be on these 5-3-1s. We do that on the opening, but as the day goes on, I'll have more traders that'll wait for 30 and 60 minute signals, so it's not so right. But if you go to the SPY, you can see this.
So we're starting short term with our charts at the beginning at the open, and then we're expanding the time horizons that we're looking at for this price action as the day goes on.
Right, and because not everybody's going to be a ninja sitting there banging keys like that, And so if you look at this, what I here, you can see how this took out the previous high. Now it's a reversal here, right on the opening. There's a reversal, so you can take that. You can take the SPY on the opening below 306.18, or and now it's a 304.85, where you can relate that to the futures. And the good part about this, you'll notice this is an outside bar, right? And so unless we have a reversal against us, we're looking to take this out. The reason is that most people are trying to read charts. We want to analyze data. There's a difference. And what I mean by that is that software is going to present things to you the way it wants to. Now, if this thing keeps going and doesn't reverse against us, it's going to form a compound outside bar of this thing, which would have been an outside bar, just ran out of time, right? And so when you can do that, that's how you gauge magnitude. Unless this thing reverses, we're going to go take this out, right? That's what we're looking at. So you can constantly watch the shorter time frames to see if you have reversals and stuff like that. Right now, sorry, looking around here. Goldman Sachs. Yeah, so we had some nice ones. Goldman Sachs, how's that coming? Goldman Sachs comes in. There's a couple other ways you can go about the opening as well. When you have something like Goldman Sachs here, we're looking for this thing to take out yesterday's close or yesterday's low here. Right when it opens, and so you can see this how it pokes up a little bit, and then continuity changes. It was green here, but it turns red here, right? And so that you can go after it right there on a shorter term basis. Here, to the 15. Here, when it pokes up and then comes slamming through here, that's when the day in the 60 go back red. You can slam it right there, and that's at 199, now puking down to 196. There's like $3 in 15 minutes. When you understand all this stuff, there's so much opportunity during the day. That's why I have so many screens, because I'm just ferreting out more and more and more and more, and then delivering it to the people that are with me, because we trade in like different groups, right? Different people are going to do different things, right? Also, we trade on the belief that trading should be a two-person job at least. Because if two people agree on criteria, one person does the analysis, the other person does the execution. What that does is reduce mental errors that you're going to make if you're going to do it on your own. Like, I got to go to the bathroom, I think it's going to turn around. It's like, nope, still good, still good, still good. And then as a group, because we know all these things, we can communicate with each other very quickly. Be like, that's going to set up the T2 reversal. That's doing this. These are doing this. And we can communicate very quickly. And so basically what I'm doing here is I have a team that trades for me. I'm directing a bunch of traders. And so basically I train people to understand this stuff, and then I'm air traffic control. So I'm just keeping an eye on this and saying, here's the new setups. Every 15 minutes, here's all the new 15-minute setups. Every half an hour, here's the new 15 and half an hour setups. And then one thing, when I talk about algorithmic trading, one of the most important things we call the flip, and that's the bottom of the hour, a new hourly chart coming up. You can see them turn those algos on and off right there. It's like a new day to us. So we also know that people's perception is going to change, right, when they see a new chart, when they see a new bar. So if you look at Goldman Sachs here again, you can see how it's going up here. And so at this point, no one in the world would say this chart looks bad. It's on the highs, right? It's like, do you know what looks good on the highs? Everything, until it does this. Boom, right there, right? And so the closer you are to hitting these reversals like that, and when things occur, this last Wednesday, something we call a simultaneous break. If you were buying into that, you're nuts. What that means is almost 90% of the S&P was taking out the previous day's lows with the futures. So it's almost impossible to reverse. It can stall out like it did, but it got hammered on the way down. So what will happen in that case is that because the futures are all screaming down, all the charts are going to look the same, right? And the reason that happens is when you have all the futures tanking like that, is that all the stocks get caught up in futures cash arbitrage. And what that means is when the futures are tanking, they got to hit the stocks too, right? And all the natural buyers just stand back and just let it go, right? And then everything will look the same. And then as we start to consolidate, then you'll start to see natural buyers and sellers in different things. So when you have a flattish market, sometimes it's easier to spot the natural buyers and sellers because you're not getting caught up in the futures. I can see you, right? If the futures are doing nothing and something's screaming north, yeah, I know what they're doing. They told them to buy, they told them to do it now, they told them to take off. And then we look for these setups that I was showing you before. And let's do that. Nike going down, Nike, how's Nike? So you can tell we're watching a lot of stuff, right? And so
yeah, Rob. So one question I'm getting, and I think you've already given us the answer. And just real quick, the audio is a little bit low because I think you're far away from the mic that's connected to this. So keeping track of all of these tickers, that's only possible because you're watching everything on all of your screens, right? And then you have a team that's doing this.
Right, and then we slow it down. Like when I train people, I slow it down. Usually I start people on 30 and 60-minute charts, so it's not as confusing. And you stay on your universe no matter what I say, right? Because I'm going to be talking about a lot of things, and a lot of times I'm just talking through it. Say, okay, this is doing this, is this doing that, or I'll refer to the video that I made the night before. I'm like, that's working, that's working. But mainly it's like there's a lot of different groups doing a lot of different things. So I'm speaking to a lot of different groups. Oftentimes I'll speak directly to them. Yeah, so we're watching a lot of stuff, but mainly people can just stay on a certain universe and do just fine. And then certain people just get it, right? And they just get it and off they go. And other people takes a little bit more time. But once you understand it and see things our way, you don't see things any other way anymore because there's no more subjectivity. It either is or it isn't doing something.
Okay, so Rob, I think you just did a wonderful real life demonstration of a very unique ethos and methodology to trading. So we've got number one is Rob and his crew believe that trading is a two-person job, one for analysis and I believe one more for execution, which makes sense with this high-speed trading. This is absolutely very rapid, many stocks, many actions or executions for optimum profitability. This is a very.
Look at this one. Just get from some of my people.
Go for it.
Look at this stamps, inside bar continuation on the 5 minutes. Look at this. It goes up, it goes inside. That's the consolidation. You buy right above this, 179.27. In 15 minutes, this thing's trading 190. Right? We like that, right? $11 in 15 minutes, we can handle stuff like that. This is what's possible when you understand what's going on. And it's not all this short-term stuff. Like I said, as the day goes on, we also look at macro charts. We'll use this on yearlies and quarterlies and then break that down. Because once you have these major signals, that's when you can reach down and do more surgery.
All right. Thanks. So that's stamps.com. Again, guys, don't trade what Rob is trading right now. Please, it's education, entertainment purposes only. We're giving you just an absolute fire hose of how these folks are trading for a living. More education, all the questions that you have right now, you will get answered tomorrow. If you're interested in what Nick is doing, make sure that you get that VIP breakout room access, because that's where you'll find Nick, where he'll be talking about like a more small classroom setting, talking about what he's doing. Literally at his brokerage to execute those options trades. And Marie will be talking actually getting started day trading tomorrow during the main track. So that will be at the end of the day, sort of the cherry on top of the entire event, getting you to a level something akin to this. I'm not going to say that you're going to be trading like Rob and his crew right away, but this is the possibility. And once again, different trading styles for different folks, different tools for different folks. So something different for everyone. So I want to take us back to Anne-Marie. Anne-Marie, could you please share your screen?
Absolutely. Where do I do that? Let's see.
Should be on the bottom. If you bring your mouse to the bottom of the Zoom window, there should be a green icon.
Gotcha. All right. I love what Rob is saying about all of what's going on in the marketplace and using two people. That I absolutely love that. Here's what we are doing right now is working on trading a range. This range could break down right here, but we just got the trigger. A lot of times when I put a position on, I'll say, all right, let's see if we can get it down here, the wicks, and I will set the trade out and wait for it to move and come into where I'm sitting. Now, the problem is, the reason that I'm a little finicky on this particular trade, and I really need to be careful watching it here, is because it's got such negative pressure that you can see stop hunting happening here all over the place. They're just coming down and forcing price action into the stops before they try to pick the bottom up. And this happens a lot when traders are trying to move us out of a particular range. And this is what is happening. We've been sitting up here and we lost that VWAP. The first thing we ought to do when we lose the VWAP is try to recover it. And that was just right into the open. And now it's fallen through that first support zone, where this really is where, if the buyers don't show up here, I am going to have to cut and run. Right? So this is a bottom picking formation. For me, I expect the chart to run right back into its relative resistance. I'm not afraid of buying that bottom because I see that every time this happens on my 4-hour chart, my traders do come in and sort of save the day. Today, they are looking a bit weaker, and I think that is going to break in a short while. So what we see right here are sellers trying to come down. Notice you'll see the bar get very red here, and then it'll disappear. And it's because we've got people trying to sell price down, but not really being able to hold against the pressure to the upside. The volume is getting thinner, though, and so you can see this is essentially that do or die spot. I normally don't like to lose more than $500 on a trade. And so this is sitting right in that spot where I go, wow, these guys better do something or this is going to fade. And one of the things that you really have to say is, I am going to take my stop where it sits. One of the key things that we do as traders very often is, if we get into a position and it begins to run against us, one of the biggest things we'll say is, you know what, if I get out right now, this thing is going to turn right around and it's going to leave me sitting. And so I'm not going to get back. I'm not going to get out. I'm just going to let it continue. Now you can see I stopped right here at my 42 level and the chart is moving up. But the question is this: when you trade and you trade consistently for a living every day, what you have to consider, number one, is, do I obey my rules? This is a game of consistency. And so what we have to do is behave consistently. And what that means is, if I take a trade and it doesn't work and it slips below what I deem is proper support, I have to stop out, because the next line in the sand is all the way down here at my 30-30 level. So a trader who gets into a trade for an intraday motion usually knows when they're getting out before they get in. Now, with someone running momentum like the way Rob is running, right? He is looking for exhaustion patterns that push him in the reverse direction of a particular trade. And so when we look at that sort of thing and we say, all right, I'm looking for that exhaustion, it still gives us the footprint of when to leave. So one of the big things that we do realize is, one, we don't always make winning trades. And you know what? That happens all the time. All the time we will take trades that we have losses on. But if you're following your system and your strategy over time, those will come back for you and you will not get into trouble. The biggest trouble a trader gets into is when they look at a chart, it breaks their support or moves against where they think they're going. They say to themselves, hey, I'm not going to get out of my trade now because I know it's going to turn around, and it continues to fade. You just have to obey the rules.
So at that point, it's turned into an investment that you're chasing.
Exactly.
Yep. And so just for the folks watching, this is a great aspect of all three of these traders. I can speak directly to Anne Marie and Nick Shaheen. These are two that I've worked with numerous times. They both have very clear sets of rules. This is my code. This is what I go into, and I'm not going to break the rules. One example that Anne Marie just gave is when a rule is broken and a stock is going further down than you expected or had hoped, and you just hold on to it. That's against the rules. If you have a particular level that you're setting a stop loss at, which is like the price that your brokerage will automatically dump those shares or sell those shares at, you should do it. And what a lot of people will do is let their emotions get away with them or become too attached to their little darlings, these stocks. And then the next thing you know, they're just standing there holding a stock that who knows when it's going to change.
That's exactly right.
So
if I could interject there, one of the reasons we think this way is because we look at investors, and investors say, I'm going to wait for a stock to come into this fair price and I'm going to buy it. Or they say, I'm going to buy this stock and I'm going to hold it for the long haul. And so it doesn't really matter if it jitters around because I'm going to have it for 10 years. That's fine. And certainly there are stocks like that. However, anytime you day trade, the number one thing, if you put yourself on a tighter cycle where you're engaging with the market more and more and more, the key thing you have to realize is every time you go in, there's the potential of a loss to be made. So start being extremely selective, obey those stops so that you can come back and trade again. The mindset of the investor versus the trader is very, very different. And most of us come to the trading world only having heard from investors. And that really is a disconnect in their mind, because there's always that sense of, oh no, everything's gonna be just fine. I'm just gonna hold it, and it's gonna be, and then, the money that you were looking to pay for X is now gone because you're in the middle of a margin call or whatever.
Yep. And Anne Marie, you do have a very clearly defined strategy, even in the form of, I'm sure it's covered in your books, as well as in the presentation that you're going to give tomorrow.
Yes, I'm really excited about that. I think it'll be really fun, and we'll be able to see things. This system has a replay that carries the live motion of the day. So we're actually going to do that, and it's going to be the exact replay of the day, so we can see how candlesticks form, how participants engage at those price points, and the things that we're supposed to think. So I'm super excited about that.
Yeah, I am too, guys. And so I just want to say to Chad, everyone watching, today, yeah, some of this absolutely is going to be over your head. This went over my head about 10 minutes into it. But the idea here is that we're showing you the potential, how this works, and really just exposing you to how traders talk, I think, is the biggest thing. And yes, a lot of it is going to seem obtuse, but tomorrow is where we're going to take you from a place of not understanding to a place of familiarity and hopefully comfort and confidence. So, if you want the literals, Anne Marie's going to outline her rules, literally like numbered rules for what she does, that are going to help you, no matter how actively trading you are. And one thing I'll add, Anne Marie, just from personal experience, I consider myself much more, I'm an investor and a trader.
Right.
So I supplement my investing, my long-term holdings that I'm looking for companies that I believe in to grow, and then I'll make trades to augment my profit as I go along. So a great example of this would be, I'm holding your basic FANG stocks, looking for growth, but then with the recent dip around COVID, and then like the crazy oil prices, not only was I still averaging into those, which is a basic investing strategy,
Right.
but at the same time, I was buying puts. So I was also betting against the market, hedging my investment with those. But the same rules applied. So I made a mistake. I bought a triple leveraged ETF. And it got away from me. So I got into something that didn't move the way I wanted to move. I lost money on it, and I just exited it. And then got some stuff that I was more comfortable with. So, and I don't think I would have done that had I not been a participant in the last boot camp.
When we are trading, we tend to think of, oh my gosh, look at how much I'm going to make. And the number one thing that a trader needs to do is think about, if this goes wrong, how much can I lose? Because the real job of an investor or a trader is to manage risk. Think about this. Think about your 401k or anything that you've got sitting with Merrill or Goldman or Schwab or whatever, and they've got it in some sort of directed motion.
Yep.
If all of a sudden you got a statement at the end of the month and it said down 47%, are you going to say, oh, well, you know what, they're stopped, they just didn't obey it, and they're looking for it to come back? And no, you're not. You're going to have absolutely no leeway for that happening to your account. And so you need to hold yourself accountable by those rules. And so if a chart is very high up, like for me, I would love to have Spotify, I would love to have Shopify. Those two, would love to have them in my portfolio. They are too expensive right now for me to think about having a position in there. I just absolutely cannot do it. And I want it. So I've got an alert that tells me, hey, listen, next time this thing has a sharp fade, I'm going to nibble in. I'm going to get X amount of shares. Just be patient if you're looking for acquisition. If you're thinking to yourself, listen, I don't know a lot about trading. What I want to do is I want to become an investor. I want to understand how to properly invest. You can use all of these types of mechanical functions and figure out how to do that. The great thing is what Rob was talking about, those candlestick patterns that you see, the market is fractal. So even though he's looking at that on a tight time frame, remember he told you he starts his new people off at 30 minutes and 1 hour? That's because the patterns appear there too. And they appear on the 4 hour, they appear on the daily, they appear on the weekly. And the longer you intend to hold a stock, the bigger the time frame you need to take a look at before engaging, so that you can tell where all these buyers were. One of the key things we're going to talk tomorrow about is how can you tell where buyers will engage most of the time? And if they don't, what do I do? And that's really, really straightforward. If you know the buyers are going to engage because it's been prior support, if they don't, you're going to cut and run. And that's the best thing. And once it's done, it's done. For instance, if I had not followed my rule, take a look at this. If I had not followed my rule, you would see that this price action has fallen continually since that stop came in. It is a clear example of why you need to pay attention to your rules, why you don't need to double down and get yourself in all kinds of trouble.
Very good, very good. And yeah, and hey, chat. This is Anne-Marie once again bringing it down to earth. I mean, we've got some complex stuff on here. I'm not gonna lie, I see a lot of things I don't understand. It looks like straight out of Star Trek, but she is breaking it down and making it understandable. And these are just simply tools that allow you to enact those rules or that code that you're going to trade by. So Anne-Marie, thank you for that. And next up, I want to switch over to Nick. Nick Shaheen, are you there? Are you able to share your screen?
I am. I want to pick up on the theme here today, and it is, wait, you guys can see my screen?
Yes.
Yeah. Okay. So the setup is important, and Anne-Marie and Rob spoke about that. It's so important to have, first of all, to know your time frame. You can't trade like everybody else you heard here today, unless you can function at that time frame. So find out your time frame, and then more importantly, find out the reason why you took the trade. If you don't have a reason, then don't take the trade. That's my opinion. If you don't have a reason to trigger, then you shouldn't do it. And write it down, because when it gets in trouble, then you have to, first thing you grab is, why did I take this trade, to see how I'm going to make a decision, right? And then the tools. Did you see anything particular about all three of us here talking today? We all have our tools. You cannot do this without tools, I promise you. So they say that, what, 80% of trading is all done by machines these days. Guess what machines do? They look left on the chart. So if you're not looking left on the chart and actually analyzing what's happening, meaning technical analysis to a certain degree, then you're at a severe disadvantage. And holding for the long term is fine, but you need a thesis for it. Don't just hold because it's going to come back in the long term. Tell that to the Macy's stockholders. Yeah, they held for the long term. Even banks, it took, what, 15, 20 years for them to get whole again? Yeah. And then what? So those are really important. Anne-Marie mentioned expensive. Expensive, you have to know what. So Shopify is expensive, right?
Yeah.
But you have to know that she's meaning not from the PE perspective, because clearly it's a growth company. You don't look at profitability. People shorted Amazon for 15 years for the wrong reason. Oh, it's too expensive. The PE is so high. Who gives a flippin' fart about that? It is about sales. It's price to sales. Amazon's price to sales is 4, meaning you go up to Bezos and say, hey, I'd like to buy your company. I want to pay you 4 years worth of your sales. He'll probably laugh at me because that's too cheap. Guess how much that number is for Zoom? 90, if not more. Wow. So if you're buying Zoom price now, share, the price is 90 times its full year sales. So you're basically giving them 90 years worth of their sales to own the stock now. That is expensive. Forget the PE that is 1,500 or whatever. I don't mind that. They can fix profitability. But the top line's too much hopium. So make sure your thesis is correct. Your tools are there. Write down the reason and pick the right time frame. I'm going on vacation soon. I'm not going to open any trades that expire during that time. So this is what I'll leave you here. I'll drop the mic and walk out.
Oh man, is that it? Are you dropping the mic and taking off?
No, but that I have no more smart things to say. I'm out.
Oh, okay, so only dumb things from here on out. So we're getting some questions in chat. We always get them when we see Nick your trading view setup. And what I want to say to folks is I don't want to spend too much time on these. Nick has some unique volume indicators that you can see on the left, the blue and the yellow. Make sure that you get into Nick's breakout tomorrow. That's going to be the VIP breakout. Just go scroll up on your Hey Summit on the website, go to the navigation, go to upgrade access. You'll get in there and he'll cover all of the tools so you can really understand his style of trading. Also got a question about how Anne-Marie uses volume in her style. We will have a brief Q&A, and I think that's a fair one to kind of talk about. But again, if you really want the buy the book step by step, this is what I'm thinking, literally write this down. You've got to attend tomorrow. That's on the main track. That's start day trading Anne-Marie's session. And by the way, you guys, you got to come back tomorrow. We're doing giveaways. I have 6 lifetime memberships to Benzinga Pro, which is our research, news, and analysis platform to give away, which is a great complement to everything that you see here today. It's got a live news feed, charting tools, screener, unusual options activity, a lot of tools that will really help you out. So we'll be giving those away today. We're also going to be giving away stickers, mugs, all that kind of stuff. And if you scroll up to the right bar on your event website now, if you scroll up, you can see that there is bootcamp merchandise. So if you love what everyone's saying here today, make sure you grab a mug or a sticker. All right, so that's my plug. I've got to do that because I work at Benzinga. So let's get back into what you're looking at here. Nick, I see you've got some notes. Can you describe the notes here?
Yes. So now it's falling. Big red ticks. Emotions are high. I want to sell and panic out of everything. But if I was looking and trading into, if I'm looking at place to buy, I'll probably consider to see how they handle this bounce right here. There should be support from here on down. They bounced here, they bounced here, they bounced here. So there should be support there. Now today is whatever, there's some rebalancing going on. They said 9 trillion in the small caps. 9 trillion sounds pretty high because the whole market, 3,000 is 13. So I don't know what the hell they're doing. It sounds like a complete remodel. So I wouldn't panic out of my longs here if I didn't get out where Anne-Marie had her red line. So there were places like I said, here's the thing. You have to have many things. So one thing I watch all day, I don't trade it. The VIX, it's an ETN, it's not an ETF, but it's such a good tool for body language. And I manage. So when Anne-Marie was looking at her ES, I'm looking at the VIX and it's like, you know, and I told my guys in the chat room, I wish I can share it there.
Hold on, Nick, stop the press. We're talking dumb. What is the VIX? This is one that we've been hearing a lot
VXX,
about.
Sorry, not the VIX. The VXX is it's a derivative of the VIX. It's a ETN, I believe. It's not an ETF, so it's designed to go to 0. I believe it has gone to 0. So here's what I watch: a 5-minute chart. Sorry, this is from a higher resolution monitor, so it's a lot gigantor. So right there, it was I was watching this red tick. That was yesterday's point of control. So yesterday, the VXX was mostly the bulls and bears of it agreed the most right here. And then today, this was the first attempt at breaking the market. And as this rises, the markets fall, right? And it hit it and it failed. They kept at it, and then as soon as they broke out, that's it. I closed while we were here. I had 3 trades open. I was like, I don't know how far they're going down. They were winning trades. I'll pay 50 cents to buy back my risk. I'll take my dollar win from yesterday. Thank you. So I'm not going to play the game. It's Friday. I'm going to, try to eke out more money. I'm done. So because this tells me that the bulls let it go for now, and I'm too busy to mess with it. So I paid my money and I'm out. So you need this if you're trading something else, because this spoke a lot. And the VXX works for me. Find what works for you. Like if it takes out this, the market is in deep bandini, because look how many times it's failed. This is a 15-minute time frame. So quite a few days. I don't see why they should take it out, but I'll put an alert here in case I'm snoozing or walking the dog or something to say, come back. This is like an inverse head and shoulders with multiple shoulders. So it might have some upset. So that would be bad for this.
I want to ring a bell every time someone names a pattern. So we just dropped a pattern, guys, head and shoulders, which is that sort of mountain range figure that you saw on the chart. Do you mind sort of tracing that head and shoulders with your mouse?
No, I don't mind at all. What it was a VXX, I believe. Okay, so it's literally you can talk it in plain simple English and demystify.
That's the way we like it.
All this nonsense. So this is a neckline. This is a place, a battle zone where they've had many failures and it's almost identical. You know, technicians will draw, like, I use crayons, but if you have to be accurate with it. But to me, it doesn't have to be accurate. So we have one attempt. So the bears are saying, in this case, the market bulls, I'm going to say the bears here. The bears are saying, I'm going to send you down to hell. And then they say, nope. They come back, they fail. I'm gonna do the same, and they succeed even more, and then they come back here, and then they say, no, I'm gonna do it again, and they don't even come close to succeeding as well as this time. So now you've got two shoulders, one head. If they break through and they prevail, then they overshoot, because the ones defending this line are clearly tired, and this move will take out. Technically, it should be as big as this, but I look left and see if there are any places where it's gonna stop along the way. So it might not be a straight line. It might be like this. It all depends on what happened left. Levels is the number one tool for me. If I had nothing, just eyeballs, I can analyze a chart. I don't need anything. The second thing I need are the volume profile. I want to know what happened where. So these little things right here are volume profiles. So for each day, this is for the region, for the whole zone. So this way I can tell where the action loves to be. So then you get levels confirmation. I don't need fancy stuff. I don't need Ichimoku. I mean, if it works for you, fine. I don't need MACD. If it works for you, fine. I just need eyeballs and some knowledge of how charts work a little bit. And trust me, it's not rocket science. I figured this out on my own. It's not rocket science.
Correct. I love what you said about looking to the left, Nick. That's so important. You know, if you want to know what's most likely, look to the left, right? And a lot of times we don't think about what's most likely. We're actually betting on the outside shot. And as traders, we need to focus on what's the expected outcome. If I took this trade 100 times, what is the expected outcome of my trade? As opposed to thinking about it like a lottery ticket. Because if you go buy 100 lottery tickets, chances are, you know, none of them are going to make any money. And really, we think about trading like lottery tickets, and it should be the complete reverse. We should go to where it's most likely that we can pick up something and just do it over and over again.
Yep. So you need a system, you need tools, you need to be disciplined. You don't wing it. I mean, I have a chat room with hundreds of people in there. They're yapping at me right now, but what they do is most of them are starting to get disciplined. But I have a few people that are usually, you know, I hate to say it that way, but they love poker, so they love the thrill of it, and they jump in on a whim. I was like, why did you? They say I'm wrong in this trade. I was like, why did you buy it? They can't say why. So this is the biggest mistake I see. So why did you take the trade? Usually you should say, okay, I saw a breakout. I was hoping for this. I saw a harmonic pattern that hit that. But if you don't have a reason why, then you probably should not have taken the trade because you went on gut or feeling or just because you saw it on CNBC. So don't be a sheeple.
This term. Yep, and I think another term is YOLO that gets tossed around a lot now.
Oh my God,
I mean, yes. So
it actually FOMO hurts you a lot here, and it works both ways. So if you see this, you'd want to chase it. If you see the SPY red candles probably today, whoops, I tapped in the wrong window. So you feel like, oh my gosh, you know, we're going to hell, but we're not. If you're getting out here, you're making a mistake because of what happened here. This was a strong, emphatic bottom. So see what happens here. If this is gone, then you've got some sort of an inverse, some sort of a right shoulder.
So let me
forming.
let me ask you, Nick. So when you see a massive index like the SPY ETF, so when you see SPY doing this kind of stuff, what are the potential plays with options that come to mind?
Okay.
I'm not don't tell me literally what you're doing. Just give me like what are the immediate ones that come to mind?
Okay, so usually on moves like this, I'm booking what I already set up. So here you would buy
which means what? That you previously bought an options contract?
I'll tell you exactly what I just did right now. Okay, so as this was happening in the IWM, I've had dueling patterns the last 2 days. I had a harmonic pattern, which usually doesn't need a trigger. It says the pattern is set, the targets are 1, 2, 3. So you have to trust it, it's going there. Super accurate, but you have to know your stuff. And then I had a level pattern that said, uh-oh, we're going the other way. So I was like, who do I believe? I'm waiting for the trigger. And as this happened, I just said IWM calls should work. So I'm basically buying the bottom off of these last 2 bottoms. And it also matches up with a harmonic pattern that says it should have gone to 39 and 40.7. So if somebody's fast enough, they can buy calls in the IWM and write it up to 140.7. So, and in simple terms is it just fell to a place where it bounced before, and I'm going to try to buy it for a trade. And then Anne-Marie said, I don't like losing more than $500. That's the other ingredient that I didn't mention. Stop loss. When you get into a trade, you have a reason and you have a place to get out. You say, I don't want to take more than 2% damage. I don't want to make more than lose than $50 or $100 or $1,000, whatever that number it is for you. It's different from somebody else. Set it. And if it hits it, get out. There'll be other trades. You can't win all, but don't stay in your trade. The best trader I know, she's amazing. And her thing is, if I'm in trouble, the first thing I do, I get smaller. So if you think you're losing money and you still want to be, just get smaller. There's not a problem. Nobody's judging you. It's your livelihood. It's your family's money. So be true to it. So this is how I trade it. So I see support, I buy it. Or if I'm long for some reason, I don't get out. So yesterday I made the comment in the chat room, this is the wrong place to buy puts. So somebody in there was short puts at the place where it was falling. And he said, okay, so I'm going to stay in my position. And they did. And they didn't lose money because they did the right thing at the right time. So if you see a level break, chase it. If you see it approaching this level of support, you can buy it to see if it bounces your way. I didn't do anything this morning except close what I did yesterday. So yesterday I had setups. Whoop, what's going on with Facebook? So Facebook caution. That's another thing. If you don't do homework, you don't get notes like that. So if I'm long Facebook now, I'm like, oh my gosh, let me go see what's going on with Facebook. Oh, what's going on there?
Let's check the news. I'm going to check the news in the background. You talk about the chart.
So my note says 210, or what did the note say? Oh, gosh, I can't remember now.
Yeah, it did say 210.
Okay, 210. There it is. 210 minus. All right. So, holy crap. So if I'm long Facebook, I'm paying attention to it. On the flip side, I know that it should find some support at this pivot zone. So this was a top and then a breakout. So this probably says attempt to buy the dip 1. Yep. See, buy the dip 1, BD 1, iffy. But if the markets fall, it's going to fall further. Buy the dip 2. This here, I'll start selling puts. Because that's how I catch my dip.
So really quick, adding context to Facebook, I just pulled this out of Benzinga Pro, the Why Is It Moving tool. Shares of several communication companies, which Facebook falls under, are trading lower in sympathy with the overall market after the Fed indicated it would impose dividend and buyback restrictions
on
following a stress test. No, this is communication. Moving financials lower. Negative market sentiment is also being driven by soft Nike earnings, increasing COVID-19 cases. That is from the Why Is It Moving tool within Benzinga Pro for Facebook. I'm going to go ahead and post that in chat. We also got a question. We are in the Q&A portion of the day. So, we're nearing the end of our session with you guys, which makes me very sad. So Rob, Anne-Marie, Nick, we are going to start pulling some of the questions we've been getting that I've been holding back on. The one here that I have is, I believe, directed at Nick. What is and again, folks, ask any questions, all right? Advance, all levels. Nick, What is a buy put? Is this shorting an option?
When you buy a put, they were made to buy insurance. If I own the shares of Facebook and I don't want to hold them below 210, there are contracts I can buy for whatever period of time I want. If I want to buy it through the end of the year, through tomorrow, through next week, through next month, I can choose to say, okay, somebody sell me insurance. So they will pay a premium, and to cover, each contract covers 100 shares. So if they only have 100 shares, they buy one contract, and that guarantees them to be out at 210 if it goes to zero. So me, the put seller, will do my homework and choose a level where I want to buy the shares off of them. And I showed you an AMD example where I was so much lower, and I was like totally okay owning it down there. Not because it can't go down there, because I think it would be a good deal down there for me to own. So when you buy a put, yes, essentially you're either afraid and you want to protect, or you're bearish. If you don't own the shares and you want to short a stock, that's how you buy a put. I'm short Zoom with a put spread, a $20 wide put spread, and it goes red and green and red and green because of the insanity that people expect out of that stock.
So yeah, I want to add a couple things, and obviously I'm nowhere near the level of the folks that we're talking with today, but I mentioned earlier an example. I own a lot of stocks that were affected by COVID fear, so they were going down. So yes, buying a put is believing that is being a bear. You're believing that the underlying stock is about to go down. So when my holdings were going down as an investor, I bought a put so I could also make money as that was happening. So that was me making a trade to hedge my position as an investor. And then Nick, let me get back to you. And I'm getting some more questions here in chat that I'll have up next.
Okay, so this is not a coincidence, just to show you how charts are important these days. Okay, so they're going to try to make a stand here if they can. So the battle is raging, just to let you know that levels are important. Okay, so yeah, buying a put is bearish, could be a bearish bet, a way to short a stock. So if you look at the short, typically when you short a stock, you're basically borrowing the whole shares, selling them and putting the money in your bank. And when the stock falls, you return the 100 shares for much less price. So if I borrowed Tesla at 1,000, I sell it and put $1,000 in my bank. And then the person that wants their stock back, if I'm right and it falls to 500, I'll buy it back at 500 and give them the shares back. Meanwhile, I made the difference. But this is a lot. But the risk is unlimited. If Tesla rallies, my risk is unlimited. When you buy shares, your risk is 100%. That's it. You can't lose more than 100%. When you short a stock, you can lose unlimited. So buying puts is a finite way cost. So the cost of the put, say it's $200, then that's all you can lose. What can you make? If you get it right, the profits are big, but don't be buy happy. You need a target and need a trigger, and you need reasons why you should buy puts.
So buy happy, you mean don't be reckless. Don't go out there just
right. So I'm long puts out to November in the IWM and the Qs because I believe our economy is as bad as it's ever been, and nobody can see that. So, but meanwhile, I've been selling puts against them. So I'm bullish short term, bearish long term. So right now I'm more bearish than bullish because I booked all of my profits from this week. So I'm deciding whether I want to renew it for next week and sell more against my asset. So yes, I am bearish into the fall, but not like catastrophe, but I'm ready. If it falls, it's going to be a good day for me, and I hope it never happens because I can still profit without making it miserable for everybody.
Yep. So he's come out with it. He is the pragmatic bear of today's session, and I gotta say, my tendencies are to align with Nick in this one. And this is a great question. I do want to ask the group of what their overall outlook is on the market based on current events. But I want to get into a couple questions. I have some fun ones. All right. So the first one is kind of fun. What are, in your opinion, the four? And this is for each of the group. I want to start with Rob. Rob, if you can hear me. What are the four essential chart timeframes to have up?
Well, it depends on what type of stuff you're trading. So, we like to use monthly, weekly, daily, and 60s.
Monthly, weekly, daily, 60.
Right, and that's your major time frames, because then you don't have to guess. Do you have a signal or do you not, right? And based on what the brief things that I've shown you, there's only so many things that can happen. And so are you taking out the highs? Are you consolidating? Are you reversing? So you notice that S&P that I showed you, the 60 reversal that was going to be a compound outside bar, that happened, right? That's happening as we're speaking, right? So we use that, the higher level of volatility, the lower time frames you can use, because when you have high volatility, you're going to have a 60-minute that is as big as a normal week.
Okay, great. Thank you, Rob. So that was monthly, weekly, daily 60, right?
Correct.
Got it. All right. And I'm sorry if you're getting some sounds. I got Benzinga Pro in the background because I see we're getting some volatility with Facebook, potentially Roku. So I'm just checking on the reasons for that movement. Again, that's in Benzinga Pro. I'll put the why is it moving data in the chat so you guys can see that. All right, Anne Marie, what are the 4 essential timeframes to look at on a chart?
You know what? I am going to say that I look at the same ones that Rob looks at. I look at the 4-hour instead of the hourly, but I always take a wide angle look before I do any trading, simply because having that big picture, just as he said, having that big picture lets you know what's going on. There's no guessing after the fact. And when you are able to look at something and it gives you a broad, it's going to give you, yes, that's in an uptrend. Yes, that's in a downtrend. Yes, that's in a sideways pattern, or really, those are the only places that a stock sits in those 3 spaces. And so if you look at that wide angle, it's able to tell you exactly where you need to participate with the least amount of risk. That's the big thing. What's the least amount of risk that I could engage in at this spot and make money?
Mm-hmm. Okay, so very conditional, right?
Mm-hmm.
As all things should be. Like, I think probably the optimum answer to a lot of these questions is it depends. But so let me hop in here. I've got one for Nick. So Nick, you said the first thing that you look at is levels, and then you look at the volume profile. What would be the third? What would be the third, fourth, and fifth thing that you would look at?
Well, I will try to see patterns.
Okay.
So because once you see a level, you want to see a pattern. Like right here, I saw levels where it's range bound, and then the pattern kind of looks like an inverse head and shoulders where they're attacking a neckline repeatedly, and once they break out of it, they should overshoot by about this much usually, and they overshot by more than this much. So I expected it to like stop right here, and they took out more. So now they're falling back to revisit. Let me get this junk out of there. So they're falling back to revisit the area from which they broke out. So in this case, they're trying to hold this line, and if not, it's very easily for them to fall back to here. But if it does, then that would be probably a long opportunity, or at least not to panic out of your shares. So if I own shares for the long term, nothing has changed. It's still higher lows. They're attacking some hindrances here. And if I zoom out a little bit, this is a 4-hour chart like Anne-Marie likes. If I zoom out a little bit, you can see that they're trying to take out some sort of a like a wall. And if they're able to get out of here, let me see what my note says. Nothing. But this is to chase it. So this worries me a little bit. What's going on here? I mean, this is not an easy wall to break.
Mm-hmm.
When it fails this many times, this sharply, then there's a reason for it. This is not a company I don't like. It's been in business for 17 years and still can't make money. So maybe this time it's different, but show me the money, so to speak.
Yeah.
So this is where retail is panicking. That's where market makers make their money. On Friday, things are dumping. Everybody's running for the hills. They're buying puts that that they shouldn't be buying. And then at the end of the day, they're going to say, why the hell did I do that? So don't be emotional with your trades.
Okay, so Nick, I want to get you on track here. One thing I do want to point out is what Nick just did was he looked to the left, which is one of his principles here.
There you
All
go.
right, so we've got this great. So the third thing after volume profile is going to be patterns, and he identified this head and shoulders, which again is sellers battling it out with the buyers. It's your bears versus your bulls, and it's what looking at it as trying to give you an indication of who's going to win out. If the buyers win, the stock's going to break out up. Sellers win, the stock's going to go break down. So now I want to get to the fourth and fifth thing. So we've talked about levels, talked about volume profile, talked about patterns. Is there a fourth and fifth thing that you're looking
There
at?
is, and I'm going to make it fun for you. It should be a variable. It should be something that you learn new. I just got into the world of harmonics. And guess what? It turns out that I already know it, only under different names. It's all the same. So if you look at a 5-3 wave pattern, it's a whole bunch of ABCs, 3 pushes, whatever you call them. And then if you see it trace out, there's a head and shoulders there. There's a 50% Fibonacci retracement level there. So it's all the same. It's a matter of math and relationships, but it's all based on prior events in the chart. So people that say technical analysis doesn't matter, it matters now more than ever, because it's a self-fulfilling prophecy if machines are doing it. Machines are trading. That's all they use, people. They don't say, "Ooh, this chart looks bullish." Yep. They calculate things and they go to extensions. They don't stop until they hit the first tier of Fibonacci, the second or the third. So they're very mechanical about it. They call it AI. I challenge that statement. It's really slick code. I'm an engineer. I get offended when people call it AI. Here's AI to me. When Rob tells his machine, gives it code and say, make money off of the S&P, here's your chart, here's your data feed, here's your money bucket, please get better at it. And it starts getting better at it. AI is when it says, you know what? Yep. I need to go learn Chinese so I can read the China headline before the American people do. That's AI. Well, we're not there. So it's just executing a really good code, and you need to be like that. So add tools. So yeah, I have my basic tools, and I just added some. So add tools, and some of them drop off because, they're not good. So far, I love the harmonics. They're very, very accurate if you use them properly.
Yep, and Nick, we'll have you talk more about that during the breakout session tomorrow. Folks, if you haven't gotten it, you should see a pop-up in the lower right of your screen to upgrade your access.
Do it.
Yeah, you'll agree. Nick is a very good direct mentor. It's definitely, you're definitely going to get more from him if you go ahead and grab that.
What did you call me? A master option? An option
master? I called you a master options trader.
Oh my gosh.
Are you going to take it or not? Just take it.
Yes, he's taking it.
Fine.
All right. All right. Thanks, Nick, for taking it. All right. And then how much further down this rabbit hole do we go, Nick? Is there something past harmonics that you're looking at?
No, not right now.
Okay.
I'm not that smart. I'm trying to install an air conditioner in my attic right now. That's my harmonic. If I can get it done, that'd be awesome.
Okay. Yeah. So chat, you're not getting a fifth. But I mean, that's a good thing. We don't want to overcomplicate things. I think we've had 2 traders today say, keep it simple, stupid. That's the KISS method, KISS. The simpler, the better in a lot of cases. Things seem complex, but you can break them down. And then these are just tools that are helping you based on those simple strategies. So let's see. Okay. So Nick, I actually have another one for you. Do you sell spreads to make, and they're asking weekly, but I just want to know in general, are you selling spreads to make income?
Yes, I did 2 iron condors this week. That's more than I usually do because I'm busy in the chat room. If you're not good enough, if you don't have enough time, you shouldn't do it actively. So yes, I sold, but I don't do them at the same time. So when the markets were rallying, I sold a 1490 bear call spread on the RUT. So I basically said the small caps are not going to hit 1490. And then on the dips, I sold at 1490 and 1350. And they were $5 widespread on either side. I collected $2.15 for those on the total risk of the opposite of, the difference between that and $5. So I thought the risk reward was great because my chances of success were way better than a coin flip. How much I took in says it was a coin flip trade, but it wasn't. So I just paid 50 cents to close the bottom end of it because I didn't want to hassle with them taking a poop down to 1350 today, which is doable on a rebalancing day. So I paid 45 cents to close the spread. So yes, I do that. I did a similar one with the SPX at 31.15. I sold that yesterday, I think, but I was already long the 3,000 on the dip 2 days ago or whenever we dipped. So again, I collected about $2 for that, and I paid about 35 or 40 cents to close the bottom end at the 30 3,000 SPX because I did not want to deal with the drama at the close today.
Yeah, Nick, thank you for that. I also appreciate you using terms like poop and not swearing live on this Benzinga boot camp. That's great. Don't want to get us censored. All right, so chat, more questions, please. We've got 3 experts here that are ready. We've got 10 more minutes of Q&A to answer your questions. Anne-Marie, can you talk a little bit about levels? I think levels is synonymous with another term that might be more familiar to people, but I'm wondering if you could talk a little bit about that and how that goes into your analysis.
Absolutely, and we can actually even use. Oh, that's good. I wanted to see what was going on with the UUP today.
I closed it yesterday. I closed it and I said I'll rebuy at the orange line.
Yeah, I think that's a really good resistance zone, though. You know, I sit a little bit on the outside. We've been both long and short here, but I like the way his charts are really easy to see and they're really nice. But he's written support and resistance on a number of those images, and I have a big screen up that I'm looking at his work on, and those are the things that we work at that we call levels, right?
Yep.
There are areas of importance, and the things that make trading very interesting is price memory. Traders remember old prices, and because they remember old prices, things happen at those old prices. Just like Nick is writing himself a note here, he's remembering that old price and he knows that it was support, it's now resistance, and when it breaks above that line, I like to wait for it to pull back and see if it will hold that line. But when it comes up over that line, that old resistance becomes support. And so these levels actually interchange between one region or another. Hang on one second. I just tried to pick a bottom and I have to flatten this trade. Okay, so when we take a look at things like this, the number one thing for us to remember is this: price matters. It's often the only thing that matters in large part because we don't make money because our MACD is showing a certain region. The only place we make money is if we buy low and sell high, or sell to open and sell to open high and buy to cover lower if we're shorting something. And so that really is the only way we make money. And so we should focus on those zones. When the big thing I really want to talk about, I wanted to go back to that options event and talk a little bit about the buying and the selling. I like to look at it like this. When you buy an option, it gives you a right. Anytime you buy something in the market, it gives you the right of an option. It gives you the right to do something. So if I buy a call at, say, right here at the UUP, and I buy it at $26 at the 26 strike, what it tells me is if the stock runs up to 35 or it runs up to 50 and I have that call, I can use my right and go out in the market and say, you know what? I know that the price of UUP is 43, but I have a call here that says I can buy it at 26. So fork it over, baby. And that becomes yours. Mm-hmm. So there's great power when you buy the option. And when you buy a put, so let's say you have Facebook and you bought a put at $240. You bought it at the money and you said, hey, I'm going to buy the right to sell Facebook at $240. You're absolute right. Well, today it's sitting at 220. That right that you just paid money for, you can put it out into the market and say, you know what? I want to buy Facebook at 220. So buying options gives you great power. The problem is if you say, hey, I want the right to sell Facebook at $240, but Facebook is $290. I don't want to sell it at $240 because I'm missing out on $50 of motion, the actual price of $290. So the amount that you buy an option for, you can lose that entire amount. Now, when you sell an option, it creates an obligation. That obligation becomes very important because there's somebody on the other side saying, ooh, I hope this works because I'm going to go out in the market and ask for that option that I just bought. So there's always somebody on the other side. So if I bought that 240 put and it goes to 290, the guy that sold it to me has an obligation that doesn't need to be met because price is not letting that happen. That option's going to expire to zero and he makes his money. So the big difference is when you sell an option, you want the cost of that option to decline. That's going to happen two different ways. It'll decline if you sell a put and price goes up. It will decline if you sell a call and the price goes down. But that's really what you want to do. If you're thinking to yourself, oh, should I sell my call or should I sell my put? Understand you want the price to decline. And so you're going to learn a ton about that, but really understanding that when you buy something, it gives you a right. And when you sell it, it becomes an obligation. It makes you a little bit more cautious about maybe selling something without actually understanding what that obligation is.
Fantastic. All right. So I have a question that I want to do a round robin style on. Nick, were you about to talk about something?
I wanted to give you a visual on, you've heard of Max Payne theory of, market makers are out there to punish as many people as possible. Look at the absolute perfect picture of it. This is the UUP that expires today. The biggest position in the puts here, dead for zero. And they're going to probably stop in order to make sure that all of these also lose. So there's no, the biggest positions, their price is right there. They bring it to where they can punish most people possible.
Meaning everybody loses.
Yep. Everybody that bought these.
Yes. Everybody that buys them.
Only market makers win here.
Yeah.
Only
of
market
course,
makers win.
If you sold it prior to that event, you're going to be in good shape also.
But this is the actual picture of it.
Yes, that's fantastic. Yeah.
Okay, so go ahead. Where did you want to take it? Mr. Benzinga. We lost our host.
Yeah, we did. Niels.
Well, we have the floor. So now I'm crying
Break out the cards.
I'm crying over my missed opportunity in the UUP, but I have to stick to my gun. Here's the thing.
I think it's going to come back.
Here's another gem I'm going to leave you with. Doing the right thing is almost never the perfect thing, but you have to do it every time. You have to do it every time. Like yesterday, I closed my UUP for a profit, mind you, for the second time. And then today I would have said, oh, next time I'm not going to do it. No, next time I'm going to do the same thing, close it early or according to my rules. And if it's early, so be it.
All right, guys, I got a round robin question that I wanted to get into. I think it's going to vary pretty widely. Rob, I can't wait to hear your answer on this. What percentage of your account are you placing into any individual day trade?
That's a loaded question. Dude.
I know.
and keep it simple, guys.
Depends.
Yeah,
I don't have an answer for you. I'm going to say it right now.
Well, that's the answer.
No, don't make it too big. Don't take a trade that's going to break the piggy. So, or your heart. Make sure your trades are of size. I know I sell spreads for a living. I sell risk for a living, but I'm very conservative. So you keep it small. If the trade is going to ding your P&L for good, that's too big. Here's one thing. If you're nauseous about it, it's a too big a trade.
Yeah.
All right, good answer. Let's go with Rob next.
All right, so here's the thing. It's like I was showing you before. It's like when you know how to gauge magnitude, and we know, like I just showed you in the S&P where it was going, What you want to do is if a trade's going to work, it will give you several setups to add to it. So you can start small, but instead of getting out, you want to add to that position. And I'll be as big as possible as long as it's a winner, as long as it keeps going my way. So it's a matter of that type of risk management and saying that because of what I've shown you, things should just go right away, right? If these computers are hitting it or buying it, it should just go. There shouldn't be any hesitation. And so when it goes, oftentimes people will get nervous when something goes their way as much as when it doesn't. They'll be like, oh my God, it just went up a buck. I got to sell some. Like, no, you don't. The other guy, you always going to get in the other guy's mind. It's like, if you're on the short side and you're wrong, you have to cover. I don't have to do anything. I'm going to profit, right? And so if you manage your risks thusly, good things tend to happen, right? Because by the end of the day or the end of the time period, whatever you're using, at the end of that, all you have is your biggest winners because you stopped out of all your losers immediately, right? Just get out of them, but learn to add to your winners. And that's the key to risk management.
Yep, I love that. So in short, it's variable, and once you have a breakout, you're adding into the breakout. That percentage goes up.
Well, once we have a signal, we have very specific signals, right? We're not looking at levels. We're going to be looking at signals like the inside bar break, certain types of reversals. TrendSpider software has actually put all of my signals into their software. I expect that conversion to continue into different venues as I keep explaining this stuff, because as you can see, Facebook was a perfect textbook. Time frame continuity to the downside, inside 15 down. This was a monster opening for us. This is, I mean, if you look at everything that was tanking while we've been talking, this was fantastic. It was perfect. Very clean, all the things downside, plenty of abilities to add and do some of that reversing too.
Good stuff. I'm kind of mad that I'm not trading right now. All right, thank you for that, Rob and Marie. I think your answer was it depends. Do you have any general rules? Do you have a cap?
Well, no. I never have a cap when I'm reading everything properly. So I do have a rule that says 3 strikes and you're out. And so I will say, hey, if I make 3 trades in a row that yield negative, I'm absolutely done. Whether it's $200 or $500 or whatever it is, 3 and I'm out, because it means that I am not seeing the market properly. So that's the only thing. I will lever up as much as I can in the current environment, because what I like for things to do is jockey around until they get where they're going. And sometimes that takes a little bit of patience, especially if you are in a fragmented pattern that is sort of whipsawing in between your potential target report. So, yeah.
Well, all right. Thank you very much, guys. That actually concludes. We're 3 minutes over. That concludes the Q&A portion of the day, which means that you guys are off the chain. So I really want to thank you guys. You guys in chat.
Off our rocker, you mean?
Yeah. Well, maybe maybe you, Nick. The rest of so everyone in chat, everyone watching. I want you to bear in mind it takes a lot of bravery and it takes a lot of so you got to be walking the walk and talking the talk to get on and live trade in front of people. There's so many people that you're going to find on Twitter, on any platform where traders reside, where they're giving advice, that are not willing to show you their brokerage account, trade with live money, and really talk about what they're doing. So once again, as you can see, these guys are the real deal, and they are willing to put their money on the line because they have the confidence, and this is actually what they do every day. They don't just take pictures of themselves in Lamborghinis on Instagram. As far as I know, I don't know. I haven't seen Rob's Instagram.
You should see my car. Actually, it's not my car. My son's jalopy that I drive. It's like a 1997 Mercury.
Yes.
Whatever.
Yes.
So
listen, to survive in this business, you have to spend less than you make. You've got to be conservative. Live conservatively now so you can live in a better way later. That's really so important to tell traders.
I'll give you the best trade ever. Americans spend about $500,000 on cars throughout their lifetime. Wouldn't you love to have that in your bank if you retire?
Yeah,
it's like $1,000 a month. Are you serious?
Yeah, I'm pretty bad about cars, though. I'm a big car buff. I like my cars, but again, you just don't try to grab the ring before you know exactly
Yes.
what it is that you're doing.
Good advice. Good advice. So I just want to close it up. I want to thank you, Rob. Thank you so much for showing us a look into your world while you're actually working with all your people. It was great to have you. Anne Marie, great.
And anybody wants to check it out, I'm at tickertalker.com, and I'm doing this live all the time. I come on at 12:30 Eastern for 15 minutes to do a halftime strat time report. I'm telling you all the things that we're looking at. And I think you can tell in a short amount of time how much opportunity there is when you just understood the few things that I showed you. But thanks for having me here.
Yep, no problem, Rob. It was great having you. And then chat, I just dropped that Ticker Talker link. That's Rob at tickertalker.com. Where you can get more from Rob. And then Anne Marie, it was great having you. Where can folks see more of you?
You can see me on Twitter at Anne Marie Trades or at thetradingbook.com. Thanks so much for having me. I really had fun. I always have fun talking to traders and talking about the market and trading.
Absolutely. And again, Anne Marie, I think you forgot to mention, but you're also going to be with us tomorrow.
Yes, it's going to be fun.
Yep, going to be a lot of fun. So folks, make sure that you attend tomorrow. That's where you're going to get the full education courses. We're going to send out, if you haven't gotten it already, the learning packet so you can follow along. This is going to be drawing chart patterns, understanding how they work, filling in questions that are actually based on the talks, and make sure that you get the recording. All right? You're going to want it. Trust me, that's a lot to pack in one day. Nick Shaheen, thank you so much.
long to 140.6. Not final trade. I'm sorry.
so IWM, that's the ETF for the Russell 2000, right?
Yeah, that's a little harmonic pattern that should be up there. But anyway, I'm not taking it right now. I'm too busy to deal with it, but it looked pretty good at the time, so we'll see.
All right. So Nick, you can get a lot more of this option stuff with Nick, where he'll go a lot deeper into the indicators he's using, the stocks he likes, etc. During the breakout session, which you can get also. That's that VIP breakout session where you'll be able to speak with him as well as Alex Call.
They can. Did you drop the link? I mean, they can get started on MarketFi if they want to chat for like peanuts, whatever it was, $7 was it?
So we've actually dropped Benzinga options. So your new newsletter is now available to everyone.
Okay.
And that is in the chat. So if you like Nick's research, you can get that. It's available on a bi-week or every other week, as well as on a weekly basis, depending on which package you get. So you can get that in the link that I dropped in the chat. I'll drop that again if you missed it.
Thank you, sir.
All right, guys, that is all I have for you guys. Thank you so much, and I hope to see you again in 30 days when we do this again.
Take care. Cool. Thank you. Bye.
Thanks, guys. All right, next up, I got Hot Stocks Luke. We're going to talk about a couple stocks that we've got in motion. I think we're definitely going to talk about the Russell 2000, which is definitely the theme of the day. So that's that trade that Nick was just about to enter. So that was IWM, which is the ETF that reflects that index, that Russell 2000 index. Do I have Hot Stocks Luke?
Neil, you got me here, but I'm getting a camera error.
What?
I know. I'm sorry. I'm sorry to let you down. You did such a good job hosting, and now I'm disappointing everyone.
Well, yeah, you might just be disappointing a lot of people right now. Man, so Luke actually got his haircut for today, and you guys might be able to tell I haven't cut my hair since COVID came to the United States. So I guess you guys are going to have to wait.
Let's do that tonight, Neil. I'll come over.
All right, he can cut my hair. Hey, chat, let us know if you think that Luke should cut my hair. I don't know if he has any experience doing it. Anyways, well, Luke, you keep like flashing in, but whatever. I want to know your outlook on the market right now. What do you have in play? I need you to live up to your name, Hot Stocks Luke.
All right, so I'll give you a macro idea and a stock idea, but on the macro side of things, I'm net bearish. And I'm like a perma bull. I feel like we hear about these perma bears all the time. I'm a perma bull. I'm always long or more than 100% long. a couple weeks ago, I hedged all of my long positions and I'm now officially net short. I mean, we're at record coronavirus cases. There's probably going to be more shutdowns. The return to normal, I think, is going to be longer than the market is building in, especially when I think we had the S&P was just off 6% off the all-time high. So I'm net bearish. That's my macro theme. And then my stock pick is Grub. If you remember that one, I actually bought that one live at our last boot camp. It's up about 25% since then. Stock looks strong. I'm hanging in it.
So what I'm going to do is actually I'm going to pull over Benzinga Pro. Okay. So let's get pro.benzinga.com up here and let's take a look at a couple.
All right, look at that, Neil. You can see me now too.
Oh, fantastic! You've never looked better.
Thanks, Neil.
So I had Roku up. Let's take a look at Grub. So Grub, Luke actually did a live trader in the last boot camp. He grabbed Grubhub. So let's go ahead and bring this out to, let's bring it out to a 3-month initially as the chart within Benzinga Pro. And then you would have gotten that, what was that? The very end of May?
Yep. Yeah. The very end of May. You're at April right now. Hop forward a month.
Oh, yeah. That's how months work. Okay, here we are. Okay, so did you get it before this big candlestick?
I got it before the big candle.
Yeah, baby. All right, wonderful. So,
Hot stocks, Luke. That's what I got to do.
Okay, and so you had another one. I believe one was suggested by chat at our last one. It was a identity management firm.
OKTA, Oscar Kilo Tango Alpha. I'm working on my phonetic alphabet.
That was pretty good. Okay, so you got into that right before June 1st, which actually the day of, I think you were seeing some upside.
Yep. I'm still in it. I was watching those lows, right? When it was retesting the lows, it looks like that what was June 11th or somewhere around there. Because it bounced off the lows, I hung with the stock. If it would have fallen through, I would have cleared that position out.
So something I want to point out, there was a pattern that you traded, that you got into that stock on, that you had some conviction on. What was that pattern?
That was a bull flag. We have to redraw it. Maybe we can have that ready for tomorrow, and we can maybe show that before we hop into our technical analysis course tomorrow.
Yeah. So I think, and what I recognize the chart here. We learned this last time. This is the cup and handle that I think I'm seeing develop here. This is on Oscar Kilo Tango Alpha. Boom, Octa. So let me see if I can go ahead and draw that. So right here, we've got that sort of saucer shape. And then we've got what forms like kind of a pendant there. That's a handle on the cup and handle. So this is usually a bullish indication. So if I were a chartist, which I'm not great with, but I'm just learning, I know about a couple patterns. This is an indication that it might be a time to enter.
Neil, I think we're learning something from these boot camps.
I didn't even think it was possible. I'm going to tell my parents about it. And then, yeah, we can see here that this is the resistance level here, making this a true cup and handle pattern. Okay, so yeah, that's just a little morsel of what you can learn. Tomorrow we've got 3 technicians, folks that really just work with charts.
You want to do a quick run through of the agenda, just so everybody knows exactly what we have coming up tomorrow?
Yeah, why don't you kick us off?
Cool. All right, guys. So first up tomorrow morning, we have how to pick stocks. That's one that I'm maybe most interested in. It's how to think about stock stories, the fundamentals. So that's going to be kicking off a little bit after 10 a.m. Eastern. That's 8 a.m. Mountain Time. So if you're on Mountain Time, you got your time there. Next, we're doing introduction to charts. So that's going to be our technical analysis kickoff. We're then going to be going introduction to options. So those are sort of our beginner sessions. And then we start to get more advanced as the day proceeds. So we're going to do how to short stocks. So if you've never shorted a stock before, it's basically how to bet that it goes down. If you have shorted a stock before, it's how to do it better. We're then going to generating income with options. So this is going to be our intermediate options course. With a couple legged option strategies, etc. Then we are moving on to turning trends into trades. So how to identify some of these big macro themes and then be able to execute and make money off of them. And then we will be moving into our advanced part of the day. So for our advanced users out there, everybody who's progressing with us throughout the day to become advanced, we're going to have an advanced option strategies course. We're going to have start day trading, and we're going to have a future of technical analysis.
Yep.
So how's that sound, Neil?
I think you did a great job there. Yeah. So guys, just to be clear, the breakout session with Nick, who you just heard from, is available at extra cost. Just make sure that you go up to upgrade your ticket before that price goes up. Trust me, you're going to want to do it. It's definitely worth it.
Yeah. The breakout is neat because it's only a couple hundred people versus the, I think I just checked, we had 6,000 tune in for the live trading today. So it's a lot more intimate. We spend a lot of time on each question. I host it instead of Neil, so that's a big benefit. So if you want to check out that breakout, make sure you hit that upgrade button at the top of the page.
Yep, and if you want to stick with me, you can do that. We're going to have some great sessions that Luke just went over. One thing that I do want to point out is that you're going to get the opportunity tomorrow if you attend. We want you to attend. We want you there. We want you absorbing this information. This is why we did it on a Saturday, because a lot of people that are working right now, they're fortunate enough to be doing so. You guys are busy. We understand that. So that's why we do the live trading on a Friday, and then we do the education on a Saturday, because it's so much more content. So in order to encourage you to be there and be present, we are giving away 6 lifetime memberships to Benzinga Pro. This is the application here that you see before you. We've obviously got our charting tools and our signature news feed, the fastest news on the planet, news so fast it's almost illegal. And then we've got a calendar that's covering anything from analyst rating changes to earnings, etc. Pretty much anything that's going to be on a corporate event basis. We've got signals tool that's going to cover anything from price spikes, gaps, block trades, to options or unusual options activity, and of course our signature audio squawk, where the most important news that's actually going to drive price changes in the market is read to you by veteran trader Benzinga Charlie. So lots of
Neil,
things to love.
I'm impressed you got that approved. Whenever I try to do a giveaway, I get 1 month free.
Well, I
don't know how you got lifetime.
Just
I don't know if we've ever gotten lifetime to give away.
Don't. What I'll say to that is, don't tell Jason I'm doing this, because he'll be
all right.
Hopefully he's not watching right now. So Jason Rasnick, founder of Benzinga.com. No one here leaked this. Don't tweet about this, but we will be doing giveaways tomorrow, along with a bunch of swag stickers, mugs, and all that kind of stuff. So make sure that you are back with us tomorrow morning. And Luke, I think that is about it for the day, unless there's any closing remarks that you have.
The only thing that I'm going to reiterate is that, again, we've got 18,000 people registered for this event. It's our 3rd time doing it. It keeps getting better. The education keeps getting more in depth. Yep. I bet it's I think, Neil, that this might be the biggest trading event in the world tomorrow.
In the universe.
In the galaxy, the solar system. So make sure you guys come tomorrow and check it out. It's going to be a blast. We're going to learn a lot. We're going to take a ton of notes.
Yep.
And we're going to start trading Monday as better traders, better investors, really leverage that day tomorrow to improve ourselves.
Yep, 100%. We are here for you. Again, everything that we do is based on post-event surveys that you guys respond to, where you tell us what you love, what you didn't like so much, and we use that to develop every next event. Down to if you don't like Luke's haircut, we can get that changed for you at the next event. So
we can do that.
We can see. We are here to deliver a good, entertaining, educational experience, so you can be profitable trading and investing and have fun doing it. So with that, guys, we're going to end our Friday session. I really, really look forward to seeing you tomorrow. That's when the most fun is going to happen. If you have any questions, you can direct them to events@benzinga.com, but please don't overwhelm us. We have a small team, so try to keep it to stuff that's a must answer thing. And then other than that, I'll see you tomorrow. We'll be doing giveaways. It's going to be a lot of fun.